What's going on, guys? Welcome back to another video. In this video, we're going to be talking about Senseonics stock, ticker symbol SENS, and how it is a possible candidate for being the next big short squeeze. We're going to go over exactly what I think could possibly happen with this stock and the exact reasons why I think it has such a high possibility to have the next big short squeeze. So if you guys enjoy the information that I provide for you in this video, please go down and hit the like button and hit the subscribe button. It really helps me get this information out to as many people as possible, and you get to stay up to date on all of your favorite stocks and learn about a couple of new ones. So if you didn't know, Senseonics is a biotech company, and they focus on the diabetes field, and they have a new glucose monitoring system that is in the process of getting approval by the FDA. So a little while ago, they were trading well over $1, and then they came out with some news about this eversense glucose monitoring system, which we're going to get into detail on a little bit later in this video, but that really sent the stock from the mid 40-cent range all the way up to its highs at $2.95. Now, it could have hit highs throughout the day, but this is what the closing high was. It came back down, shot back up, and then started a pretty significant sell-off after they announced that they were upping the amount of their share offering. So in order for a company to have a short squeeze, there obviously needs to be a high short interest, which Senseonics definitely has. If we come over to this page over here, we can see that the short float for SENS is a little bit over 30%, coming in at 31.5%. That's really high for a company, especially a company that is such a small market cap like SENS. So by now, I'm pretty sure all you guys have heard about the GameStop short squeeze, and you probably have a decent idea of how short squeezes work. But just a refresher, when you short a company, you are borrowing shares from a broker that you do not own and selling them on the open market and collecting a premium for the sale of those shares. So what you are hoping to happen is that you are hoping that the share price is going to fall, and then when you decide to close your position, you are going to be using the funds that you brought in from the initial sale of stock to buy back to close that position at a lower price, and your profit would be the difference in the share price that you sold it at and the share price that you bought it at. So for an example, if a stock was trading at about $100 and you decided to take a short position of one share and the stock went down to $90, you would buy back the stock for $90, netting you a $10 profit. So another reason why Senseonics might have a short squeeze is going to be different from what we saw in GameStop, where a bunch of people got together and decided to buy up a lot of shares of the company and hold it, forcing the shorts to have to cover their position and buy back the stock at a higher price. So in this case, basically, Senseonics has a very important pending FDA approval, and if this FDA approval gets approved, we could actually see Senseonics go absolutely crazy, and if the stock goes up high enough, it could trigger an absolutely crazy short squeeze. So let's take a look at exactly what this is. So we can see that Senseonics plans to roll out its new long-term diabetes sensor implant, and it will be pushed to the middle of next year as FDA reviewers continue to be swamped by product submissions aimed at the pandemic. So the upcoming version of the Senseonics eversense continuous glucose monitoring system, a smartphone connected device, was first approved in June 2019, and it's inserted completely under the skin and aims to double its lifespan from 90 days to 6 months. That's absolutely crazy, but as we see, the company had received word from the FDA to expect delays of at least 2 months for its application, while the agency tasks its staff with emergency reviews of yada yada yada. You guys get the point. So essentially, the setback matches what Senseonics has heard from other medtech developers currently trying to get their products reviewed. The company said, noting that there's still potential for the FDA to reach an approval decision before the end of 2021's second quarter. That would be unbelievable news. This product is looking like it is going to receive FDA approval since its previous successor has already been approved. So we see first approved in June 2018, and they basically just tweaked tweaked the lifespan of this device. So if we can see Senseonics get this approval coming up in the near future, we could see this stock go absolutely crazy. I'm predicting that if we end up getting this FDA approval, the stock could go to $10 just on this news alone. And we also have a short squeeze to factor into this. So with the 31.5% short float, this stock could go absolutely ballistic. So the main reason that we saw Senseonics drop was because they decided to up the amount of their capital raise. So if we go over here, we can see that Senseonics raises size of equity offering to $100 million. So Senseonics announces that underwriter has agreed to increase the size of the previous offering and purchase on a firm commitment basis 51.9 million common shares at $1.92.5. So basically, the gross proceeds are going to be for $100 million. The underwriter's over allotment is an additional 7.8 million shares, which basically means that they have an additional 7.8 million shares that the underwriters are allowed to purchase at this $1.92 price. And the company also goes on to say that the net proceeds will be used for general corporate purposes, including product development and commercialization and funding working capital. So basically, that's pretty standard. The stock did run up a lot, so they're just trying to capitalize on these gains and pad their balance sheets. But I think long term that this company is going to be using the funds that they are raising for a good reason. They are a big player in the diabetes glucose monitoring field, and I think that if they can get this FDA approval, their company is going to be viewed as more legitimate than they were before. In general, though, I'm always a bit hesitant with these biotech penny stocks when they go up a lot, especially when Senseonics is in such a small niche, such as these glucose monitoring systems. Now, this market is expected to increase a lot in the future, so that is a good sign for the future for this company. But in general, my strategy for playing these types of companies is to put in an amount of money pretty small, and then if the company goes up between 20 and 50%, I will sell off my initial investment and then just leave the profits in the trade forever. So I'm playing with house money. I get my initial investment back, so there's no more risk on the table. So that's going to be it for this video. If you guys think that Senseonics could witness a short squeeze in the near future, please comment down below your thoughts. This market has been absolutely crazy recently. We've seen GameStop go absolutely ballistic. Robinhood and a couple of other brokers have disabled trading of these companies. It's been an absolutely crazy week. It's probably been the craziest week that I have ever seen as a trader. But that's going to be it for this one. If you guys enjoyed what I had for you, please go down and hit the like button and hit the subscribe button. It really helps me get this information out to as many people as possible. And then that lets me bring you guys this information 3 times a day at 10:45, 4:15, and 7:45 Eastern time every single night. So I hope you guys had a really profitable trading day, and I'll see you guys in the next video.